Well, good morning, and it's Friday morning, Melissa. How are you?
I am good. How are you?
I am good. It's been a long, busy week, which is good. We're in spring selling and, it's just fires everywhere, which is,
It's
real estate for us.
yeah, I feel like spring break is like a time to go on vacation and we kick off to the spring selling season.
Yep, exactly, exactly. And we're coming upon, I think the second week in April is like historically hottest week to listed. So, and buyers coming out. So it's upon us and get ready, I guess.
It's game on.
Yeah, yeah. So I know I've been keeping an eye on the news and a lot of stuff has been in this, well, the last couple of weeks in real estate, but on the finance side, let's talk about that. What did you see
Yeah.
happen this week?
So we've had a lot of news that's been released that is basically means the economy's doing well. So you see the headlines about, oh my God, the sky is falling, the sky is falling. But we had numbers this week. GDP came out at 3.4. It was expected at 3.2. The Michigan Consumer Sentiment Report came in showing that people are a little bit more optimistic about the market than it was predicted that they would be. And then the PCE inflation numbers came out today. They came in just basically as expected, technically slightly under expectations, which is good, but it doesn't like it's nothing dramatic that's going to move the needle to get us to that 2% number. So we're ever so slowly dropping closer to 2, but we're still not there and we're not getting there fast, which I mean, we're not at 9 anymore,
Yep.
but until we get to 2, the Federal Reserve is going to feel pressured to keep interest rates up.
Yeah.
Uh, so that's not helpful. It might take bad job numbers to get the rates to come down faster, which we don't want. We don't want people to lose their jobs, but we might see higher interest rates for a little bit longer if the job numbers stay good. So, and I know there's a lot of pressure from companies with higher interest rates to see higher profit numbers and then take a look at all their expenses. And some employees are an expense, and so yeah, we'll see.
And one of the things I was at a seminar yesterday for wealth, finance and wealth, and one of the things we talked about was that sentiment about the economy is raising a little bit, but even though people are kind of like on the fence, companies are spending, people are spending still, so nobody has really stopped doing anything in their life to to
Yeah,
show that their sentiment is low.
they really haven't, and that's one interesting number that came out. So the personal income number went up 0.3% month over month. So it's good that it went up. A massive increase would be inflation rate, but that's not massive. Personal spending though went up 0.8%. So
Crazy.
they're spending more than they're bringing in. Savings rates are down to 3.6%, which is the lowest it's been since December of 2022. And so you do kind of think, how long can this possibly keep going? And some of the things like apparel, that's spending, like that's people spending money and maybe putting it on credit cards. Energy and gasoline, those are kind of out of people's control. You need to drive a car, you need to eat and cool your house. But some of those more just general fund spending categories are the ones that have really been driving inflation.
Yeah, yeah. And we still haven't seen the recession, but
Right. No, we haven't, which is good, but
it's good. Yeah.
they're probably going to stay about where they are for a
Yeah.
little bit.
So one of the other things that we were talking about yesterday, and this was really cool, it was really eye-opening for me and as a realtor, as real estate advisor, was that there's currently $18 trillion in liquid assets in America. And what that means, in a nutshell, is basically as the feds start to lower the interest rate, bonds are not going to be, as lucrative. So people will stop investing so much in bonds and will turn back to real estate and start buying real estate again. And what that means is if you basically wait to buy until the interest rates come down, the cost of homes, we already know it's gonna appreciation happens, especially in America, especially here in the Dallas-Fort Worth area. I mean, we do nothing but appreciate here. So what that's gonna do is drive up demand for buyers, therefore driving up the cost of homes most likely more than it would normally appreciate. So, which means that the cost to buy a home is going to be more expensive.
Yeah,
Just so. What are your thoughts on that?
waiting. And yeah, I put together numbers for some clients recently who, in this case, they wanted to wait. And I'm going to share my screen and actually share this because I think it's eye-opening. Because most people I don't think about it this way. But this particular client wanted to, and I think I'm sharing the screen now. This particular client had a 640 credit score. They could buy, they could use an FHA loan, but they really, really, really were convinced that if they had a higher credit score, they would get a better deal. Well, not true. So I showed them what it would look like if your score was 760. It's basically the same, a couple dollars less, I think it is. No, it's a couple dollars more than the FHA option. But let's say it takes you 2 years to get to that 760 credit score. And in that 2 years, you really aren't benefiting because the price of the home has increased. It's gone from 400 to 432, and that's only assuming 4% appreciation per year. I mean, that's like giving up $15,000 per year. Like, hey, I'm gonna get a raise, or I'm being offered a raise at my job to get $15,000 more per year, and I'm like, no, I'm good. I'm gonna wait. But it's that significant.
And what does that do for the payment in cash to close?
So it would save $292 a month, or $272 compared to FHA now. But no, I'm sorry, I totally got that wrong. It would be more expensive because, and this is assuming the rates hadn't gone down, which maybe that's a bad assumption, but it would be more expensive on a monthly basis. And they would bring not a lot more money, but $9,000 more to closing.
Wow.
Yeah.
Yeah, that's a big difference. So the cost to wait is,
It's real.
yeah. Wow. This is eye-opening. And so payments, so the payments is only a difference. I mean, that's a big difference. That's $270 difference that you'd pay more by waiting. Plus you're paying more for the home.
Yeah.
Plus your cash to close is going to be more. So is it really beneficial to wait? Obviously it's not. And 640 credit score versus 760,
Long time usually to get from a 640 to a 760.
Yeah.
And you don't need to. You really don't need to. Buy now. Buy now and work on your credit score while you own the home and while you are getting $15,000 of equity per year.
And so if you buy now and work on your credit score, getting the appreciated value in equity, when rates come down, refinance, and you're saving all over the place at that point. You have your cash, your equity in your home, which in 2 years is at 4%, which is low for this area, but still at 4%.
That's very conservative. Yes.
Yeah, is $30,000, and then you refinance for hopefully by then we'll be definitely in the fives, but who knows what's going to happen.
Exactly. And at that point, you're also going to pay down your mortgage a bit. Your home's going to have appreciated, so your loan to value is lower. And at that point, it becomes more beneficial to go into a conventional loan because the mortgage insurance on the conventional loan is fairly expensive if you put 5% down. But if you have 10% equity or 15%, it becomes very inexpensive.
Mhm.
That's when you get the benefit of doing the conventional loan. When you're buying it and you want a low down payment, you're, in this case, you're so much better off just going and buying now with the FHA loan.
Yeah, so I hope people watching this will take a screenshot of this and really, look at the value of simply just buying now and, fixing credit or, or refinancing, when interest rates come down, because I mean, it's an obvious choice to me to, just go ahead and pull the trigger now, get that home that you're looking for. And right now, we're seeing more homes coming on the market because it is spring selling. I think I saw the numbers were, I think it's 11% higher than this time last year. We have 11% more homes than this.
Really good.
Yeah,
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 so that's really good.
yeah. So people are definitely selling homes. That means that you have a better chance to get into a home right now. Um, and at a price point that's better than just waiting even a year.
Yeah,
Yeah, or even during the summer, at the summer times, that's typically the highest that you'll pay for a house for the year because, there's so much more competition. So yeah, now's
yeah,
the to do it. And so the first thing, of course, to do is to get pre-qualified. Reach
yes.
to Melissa to get pre-qualified and go to Melissa Condensa.
.com.
Yep, to fill out the application and see what you need to do and see what you qualify for, see what your budget is. That's the very first thing to do, because I had somebody come to me wanting to see homes, and they knew how much they made and they knew how much money they wanted to spend a month. And I was like, okay, that makes no sense. So let's get you pre-qualified. Well, and they, of course, didn't want their credit pulled, didn't want it to affect their credit. There's ways, soft pulls.
Yeah, soft credit pulls. And I mean, you can't buy a house without your credit being pulled. Eventually, we can, but I do like that we start the process with that soft credit pull, because then if someone isn't ready, they haven't had a hit to their credit, and we're able to give them a game plan so
Yeah.
that they know what to do to get ready.
Yeah.
So, and if they're ready, great. We can actually, on a conventional buyer, go all the way to contract before we do the hard credit pull.
Very good. That's good. That's good to know. Anything else you need to add to this? I mean, this is great information. The market, the financial world here in America is doing well. It's unfortunate, that we still have to wait for those Fed funds to come, interest rates to come down, but it is what it is.
Yeah, yeah. But no, I mean, I think the only other thing to know is that, as the market heats up, which I feel like it is already, being credit approved and setting yourself up for success is more important than ever. And
Yeah.
most buyers that I'm working with right now, we are taking that extra step of getting full credit approval, so that if they're up against multiple offers, they at least are approved. They can give
Leverage.
them 5-day financing or waive it altogether. They can close in 17 days. So those types of things start to become more important
Yep.
as the market gets more competitive. So we're already starting to see
Yep.
that
Yeah,
happen.
that's great leverage for making a good offer.
Yeah. So,
Yeah. All
ooh,
right. Well, thank you so much. This is great information today. And I hope you have a wonderful weekend. It's supposed to be a beautiful Easter holiday weekend. Enjoy it.
you too. Thank you.
All right. Thanks. Bye.